having this prediction market where people can see potential futures, that creates this potential for observation, and that observation changes reality.
James Pierog, co-founder and CEO of BitcoinPrediction.market, runs a Lightning Network-powered betting platform. Today, he discusses Bitcoin's potential for prediction markets, its advantages as a development platform over other cryptocurrencies, and its role in reducing governmental control.
They want everyone to be subservient in some way. Don't rise up, because if you are in competition with them, then you're a potential threat. Singapore, where I was, it was a complete authoritarian shithole. You had literal robot dogs monitoring the migrant workers who are essentially treated as slaves. The thing about Bitcoin is that they can't stop you. I think prediction markets are kind of that next killer app. They can use their money as speech. What's going to be the thing that lasts for another 10 years, 15 years, 20 years, 50 years? It seems like no matter who wins the election, there's going to be a dispute.
Problems that arises with prediction markets is the Oracle problem. How are you guys approaching the Oracle problem? James, it's great to see you again, sir.
Great to see you again, Marty.
We had the pleasure of meeting in person in Riga, Latvia, of all places.
Yep.
Place in the world that neither of us are from.
Yeah. Shout out to that conference. It was completely epic.
The Baltic Honey Badger Conference run by Hodl Hodl and Debify. And we found ourselves talking both days for at least an hour. Mm-hmm. And we were talking about mining and how to fix the centralization problem within mining via prediction markets, which is what you're working on, BitcoinPredictions.market. But before we get into this, when we met in Riga, I guess before we get in, we're just going to get into it. We were talking about this mining centralization problem, and that's what you guys were looking to solve specifically. But it seems like you've been traveling the world since then, and the product has iterated and transformed quite a bit.
Yes. So we started out with mining centralization. Well, let me just bring it way back. We were at Wolf, the Wolf Accelerator. And while we were in Wolf, the idea that we got into the accelerator with in the Genesis cohort was Lightning node automation. We wanted to solve that because we thought, okay, if more people could run a node, then more people would run nodes. If it was easier to run nodes, then we would have more proliferation. We quickly found that the market was a bit too nascent, and it was really difficult to sell a solution that we could come up with. So week 6 of the accelerator, which was an 8-week program, we pivoted and we didn't know what we were going to do. And so one magical weekend I was in Philly and I met a friend, and we came up with this new idea called Agora, which was basically a social betting market. And people could basically vote with sats on opinions. And after a time limit was reached, the winners would split the losers' money. And we thought, okay, this would be an incentive for people to, let's say, provide liquidity to our node. And then we could still run our node and automate things and, optimize stuff. But now there's an incentive for people to make payments. That received some traction, but not enough for us to continue working on it. And then we iterated through many different ideas since then. And basically the central thing that we realized with Agora was that we were building something cool, but we weren't solving a problem. And startups, we should solve a problem. That way we can stay focused on the customer and build something that they want. And that's where we kind of got the whole mining idea from, because, mining centralization, it's a real issue. Like if hash rate aggregation is the only way to reduce variance, then the hash rate will continue to aggregate, right? Because miners hate variance, pools hate variance. That's why there's this whole proxy pooling problem, right? Because miners, they mine in pools to reduce their variance, and then pools mine for other pools to reduce their variance, and that's not particularly healthy for the Bitcoin network. So we thought, okay, if we just allowed betting on the mining pool block reward game, basically this competition, then maybe that could solve the variance issue, and we could put our infrastructure of betting with sats to a use that solves a problem. Now we got a lot of attention from that. That was really great, right? We have talked to some pretty big pools who are interested, but as you said, while we were in Riga, it's a capital issue, it's a liquidity issue, not necessarily a tech issue, right? And the central issue with our platform is aggregating that liquidity so that, let's say, miners and pools can bet against some counterparty who's willing to bet. And so we were tackling a lot of like the security issues around that with like DLCs and optimizing the tech and like doing a bunch of research to basically mathematically prove that it would reduce variance and have positive ROI for the capital. But it was kind of like, we're on a fundraising journey right now, and it's a lot easier to explain Trump betting to an investor than it is to do mining centralization and variance reduction and all that. So while we were in Amsterdam, I was talking to some really smart people, and one of whom, Austin Alexander, who used to be at Kraken, and he was like, his confidence in prediction markets and the future of prediction markets came from his experience working at Kraken for like 9 years, right, doing exchange. And one of the things that struck out to me was what he said. People said that, you couldn't compete against Binance or Coinbase, right? That exchange business was dead. But you look today, what's the biggest business in crypto?
It's the killer app from like a VC perspective. Like, what is the killer app? It is buy, sell Bitcoin. Exactly.
So he's like, in 10 years, prediction markets, there's going to be 10 to 20 multi-billion-dollar prediction markets. And he just kept hammering me, like, just go to your hotel room, start coding. Like, you don't need to do anything at this conference. Just get this next iteration out with Trump betting. And so I talked to my co-founder, and we were talking about this for a while. Like, okay, should we do a regular prediction market? Like, we have the URL bitcoinprediction.market, right? Like, we could just do this at any time. Like, all the infrastructure is like set up and ready to go. But I was still kind of hesitant because we wanted to solve a problem, not just build something cool. But hearing from all these people, like, oh yeah, you should build a prediction market. Like, everyone that I talked to at Bitcoin Amsterdam was like, build a real prediction market. And I was like, okay, let's do it. Let's see what happens, right? At the very least, if we fail, then we show that we tried, right? And then we can go back to doing what we were originally doing. And it's been so far like really great. It's the most traction we've ever got in building a product. And I mean, it's nothing compared to Polymarket, right? Who has like hundreds of millions of dollars in liquidity and volume. But, now we have around 10 million sats bet so far from all of our users, which is way more than we got with like the mining pool betting and way more than we got with the social betting. And what I find really fascinating is it's kind of the kernel of the original vision of this voting with sats on opinions, because there's a reason why the election is the thing that's attracting all of the attention and liquidity, right? Because everyone's got an opinion on it, right? It's not just like betting on commodities or something economic, something financial. It's something that's political, that's tied to people's identity. And when people bet Trump yes or Kamala no, right, are they necessarily betting what they think will happen or what they want to happen? Is this just a bet like on a poker table, or is it like money as speech? And I mean, if you've played poker, betting chips is like speech, right? When you're bluffing, you're saying something. You're saying, I have this hand. Mm-hmm. When you're betting on Kamala or Trump, that's saying something, right? Like, people are talking about market manipulation to like move the market, change perception, and money talks, right? Like, if you're risking a shitload of money to bet on something, that's saying something about your own conviction, right? And I think that's the powerful thing that's yet to be unlocked, that elections are just the beginning of, right? There's something far more I guess primal in using money to communicate something. And we've got it, like, we've kind of been dancing around it as like a Bitcoin community, right? Value for value, right? People sending sats because they want to support something. But I think prediction markets are kind of that next killer app that could just, ignite this kind of Bitcoin catalyst, people flocking to use Bitcoin because they can use their money as speech for something.
Well, no, it's like a derivative of buy, sell, but like, again, going back to the killer app, first 15 years, buy, sell Bitcoin exchanges. Obviously, there's different archetypes of people leveraging these exchanges. Your individual is using Bitcoin as a savings vehicle, DCAing, and just holding for the long term. But a lot of the liquidity and volatility is driven by traders who are speculating, and prediction markets are certainly a derivative of speculation. Killer app up to this point is speculation on the price of Bitcoin to a large extent. And now you're just basically bottling that product market fit and expanding its branches into other things that you can speculate on.
Exactly. And we're trying to figure out like what's the optimal infrastructure that we can build on, right, to facilitate this, because, you know, I've looked a lot into Polymarket and their Oracle network. You know, you have like some 30% APY for like staking and like voting and then doing all this DAO stuff and governance and whatever, all this like a bunch of over-engineering noise, in my opinion. Like I used to work in a crypto consultancy doing like token economics consulting, and it's like, yeah, you know, this is just seniorage that's put under this veil of like technobabble jargon that you can basically sell to the next chump, right? Like as like a Ponzi scheme type thing. Like if we're going to be creating this infrastructure to last, right? What's going to be the thing that lasts for another 10 years, 15 years, 20 years, 50 years, right? Into the future? Is it going to be something that's built on, you know, unsound, very changeable money, or is it going to be on Bitcoin, right?
Yeah, well, it's a good opportunity to dive into it. Let's dive deep into the Polymarket sort of stack and how that market actually works.
Yeah, sure. So basically, Polymarket uses these Gnosis tokens, which they use LMSR, which is the logarithmic market scoring rule, to facilitate trades with their automated market maker. And that's a pretty cutting edge infrastructure, right? Like the guy who developed Gnosis, extremely smart dude, talking about prediction markets way back in like 2014, 2012 at like the San Francisco Bit Devs. Obviously, he became disenfranchised with Bitcoin because of the kind of lack of development activity, the fact that it was really difficult to build on top of it. So yeah, he naturally moved to do his own thing. And Polymarket built on top of that, as well as this kind of decentralized Oracle network that they're using to facilitate their bets. But, you know, when it comes to using this kind of infrastructure, right, is every piece built specifically so that it can solve this problem, right? Or is it something where we're trying to build the most cool looking thing that we can sell to investors and also to retail, and say that we can pump a token, and then there's this kind of side motivation of token pumping rather than just the primary motivation of like forecasting, right? And I think Polymarket, as far as crypto products are concerned, is like the best one, right? Besides like stable coins, right? Mm-hmm. But the issue that I have with it is that it's, you know, it's based on, first of all, fiat currency. It's based on like all this blockchain technology. And I'm just really bearish on both of those, right? Like if you look at all fiat currencies throughout history, they're tanking and they're going to shit, right? Bitcoin is going up, and sound money needs sound infrastructure to create sound predictions at the end of the day. Like if you can just overinflate a token, then you can just pump the market, right? But if you just have Bitcoin, yeah, you can, let's say, have a shitload of fiat currency, sell that, buy Bitcoin, and then use that to pump the market. But you're still using Bitcoin, right? That's something that's finite. That's something that's like provably finite. And you don't need to, question any of those kinds of principles because it's baked into the code, right? And whereas all of these other projects, they're always changeable and flexible, and under the bedrock is shifting like an earthquake. So when you have that shifting, then naturally what's built on top of it can also shift. Yeah.
I mean, we're getting back to like the utility token meme of 2017 and beyond. And that, I mean, I think to put what you just said another way, if you're going to build this type of product, a prediction market, you want it to be on sound foundation using a currency that is not fit for purpose for this one thing that can be manipulated, because you have a utility token for one application, like it can be easily manipulated. Whereas if you're building a prediction market on Bitcoin, which people are using for thousands of other use cases outside of that, it's not focused on the predictions market use case. And when you have that narrow, myopic sort of function for a token, it can easily be manipulated.
Oh yeah, for sure. And the fact that we're using Bitcoin, I feel like, is something that will stand the test of time, right? When we have unsound foundations, we get unsound results. And what we want to do is forecast the future, right? Not just be so concerned with all of this other crap that we need to, sell to, pump a token to just kind of be diverting from the original sole purpose of what we're doing here. And it's like, yeah, like Bitcoin is just so much better.
Sup freaks, this rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20. This rip is also brought to you by our good friends at Coinkite. Coinkite builds the best Bitcoin hardware in the world. There is no second best when it comes to Bitcoin hardware. If you're looking to secure and self-custody your Bitcoin, you can get the MK4 or the Cold Card Q. Cold Card Q has a full keyboard, a QR scanner, NFC enabled, has a battery pack. Put some AA batteries in there. Create private public keys off pair in an air-gap fashion. Private keys never have to touch an online device. They have their SATS card, which is the best way to give Bitcoin. If you're looking to gift Bitcoin for a wedding, a birthday party, a communion, a bar mitzvah, whatever it may be, tap the card on the back of your phone. You get an address to send to. You send it to that address. It lives on the SATS card. Again, there is no second best when it comes to Bitcoin hardware. The Bitcoin price seems to be going up. You want to take care of your security before Bitcoin goes to 6 figures. Make sure you get your Bitcoin off exchanges using Coinkite hardware. MK4, Cold Card Q. Go to coinkite.com. Use the code TFTC. We have a code now, TFTC, for 5% off at checkout. And despite our opinions on the technical flaws that are made on a trade, the technical trade-offs that Polymarket is making, let's talk about like why Polymarket is successful. It is inarguably extremely successful right now, being talked about in the mainstream news. You have Trump referencing it during some of his stump speeches. And historically here in the United States, leading up to elections, people have really depended on polls from different polling operations to try to get a sense of what's going to happen. But it seems like this election, this prediction market, is not only being looked at alongside the polls that have been used historically, but many people are preferring the signal being provided by Polymarket to the polls.
Yeah, I mean, Polymarket has done just a fantastic job when it comes to being the first to kind of shift the Overton window, right? Prediction markets as a concept have been around for a really long time, right? I think Robin Hanson first published his paper on the logarithmic market scoring rule back in like the 1970s or 80s. I think it was the 70s. And the LMSR, which is the fundamental thing that's used by all these different prediction markets, is essentially a scoring rule which gives experts, if experts want to provide a forecast, they provide a probability of something that's going to happen, and then the scoring rule pays them out based on the probability that they give after the event happens. And so since it's a market scoring rule, you can have a whole market of people using this scoring rule, and anyone can change the probability that is shown. And it's logarithmic because the world just operates in a logarithmic kind of way. Like it's kind of like a power rule thing. And it just works a lot better than all these other metrics. And so prediction markets have been around for a really long time. Like Microsoft's implemented a prediction market. There's been like Predictit and all these other like academic prediction markets. And a lot of it has centered around elections, mainly because, well, it's actually surprisingly difficult to come up with topics for a prediction market. Like when it comes to elections, it's like, yes, this is a one date thing, or, there's finite many outcomes. It's pretty easy to see that like a lot of people would be interested in seeing what the outcomes of an election are, and people would be really passionate to be betting on it. So yeah, elections are a main focus, but there's pretty much anything that you could use. Like you could bet on anything. It's just, what's the thing that's going to attract all of the attention and liquidity? So Polymarket, they have tons of different topics to bet on, but the main one is really the election, right? That's the focus, front and center. And yeah, I mean, they've done just an incredible job at basically marketing that and getting through to people how this is a technology that could be used in many different ways. Like when I was looking, I think the most compelling one that I've seen so far is, I think it was last month or so, their market, will Israel invade Lebanon? And I was watching the news, keeping up every day, seeing the odds and then the probabilities move. It was like at one point 30% probability, and then it shifted up 45, 50, and then it went down to like 40. And then soon enough, it was at like 70, 80, 90, and then boom, like shit hit the fan. And that's one of those use cases that I think, okay, yeah, if we had more markets like this, where we're talking about shit actually happening, then this could give real insight where before there was not too much insight, right? Like we have AI, which is trained on all of the past data in the world and used to basically have this super intelligence that can also censor and basically just give you whatever the creators of the AI want you to receive. You have all of this news, right? Mainstream media, which is basically propaganda, right? Going back to, let's say, Edward Bernays, all of this mainstream media is always coated with some level of corporate or state propaganda that colors the message and it changes the way people view about it. When you have a prediction market, you're kind of cutting away a lot of the bullshit that would be, let's say, placed next to all of these different events that could potentially happen. And it's not past looking, like it's not looking towards the past, it's looking towards the future. And that's the main thing, like what's going to happen. Now, the biggest challenge, right, that I see, and my biggest criticism of Polymarket is like the actual events that people are betting on. I see they're kind of transitioning to sports now that, let's say, the elections are going to be over soon. And yeah, everyone wants to bet on sports. Like it's a huge market. You have like FanDuel and DraftKings and Bet365 and all the different casinos and all this kind of like gambling speculation stuff all over the world, right? But that's a niche that's really crowded, right? You have, when people are going to switch from one app to another, you need like an order of magnitude improvement in some way, right? Otherwise, the network effect will be a great defensibility for those other businesses. But when it comes to novel markets, what are the most important novel markets that we're going to have? With Polymarket, they've hit the nail on some of them. And I am like so pumped to see that. But I think we could do even better. And focusing on like what actually are going to be the most important events that shake up the collective consciousness of humanity, that's something that prediction markets can give insight into. And that's something that I feel like it's not looked at, right? Because first of all, it's really tough to even see that in the first place, right? And second of all, predictions are very hard, especially about the future. It's really tough to even just make okay, will the US go to war with Iran in July, let's say, of next year? Why would you pick that arbitrary date? Why would you pick that arbitrary event? What are the actual outcomes that you want to specify? And what are the rules of that confrontation? The further you look out, the more general you need to be. And then the more likely it's probably going to be like a total yes or a total no. That's what I see with a lot of Polymarket stuff. Like it's going to be either 6% chance or like 97% chance. but barely anything in between. And this is not necessarily something on the tech side that needs to be improved. It's just something that like, it takes a lot of work to like research and to put in the effort and see exactly what's going to happen. And that's not something that can, it takes a certain worldview to actually see what could happen and then make a market around that and actually provide liquidity and allow people to bet on it. Because if you just list some kind of, if the market that you list is obvious or stupid, then you're going to get obvious or stupid answers, right? It's not going to be that useful. But if you list something that actually could happen, that might be, in the cards in the near future, then that can actually provide value for people outside of just the gambling and speculation side, but like just as a forecasting tool for like future events that could impact a lot of people worldwide.
Yeah, impact markets, impact quality of life, all that. And that's, as you're explaining that, I'm wondering in my head, could the emergence, proliferation, and widespread adoption of these prediction markets prevent what many would deem to be unfavorable events in the future? Like if you see that a prediction market is heavily weighting or saying there's a high probability that the U.S. will go to war with Iran at some point in the future, just using the example that you gave, could it force people to act today to prevent that from happening in the future?
Hopefully. I mean, we would want to avoid all this collateral damage and needless death of civilians and also military personnel. Like, I heard this quote from, I was watching this YouTube video, and there was this little babushka in Ukraine talking about how, when the rulers fight, then it's the civilians who suffer, right? Like, if it's possible to forecast these events and possibly prevent some, violent uprising or violent kind of like just explosion of
kinetic conflict.
Yeah, conflict. Then maybe people can sort things out in a more peaceful way. And maybe that could lead to just a better future, right? Like that's the kind of transmutation that we're talking about with like, okay, yeah, we have this degenerate gambling going on. Like it is betting, it's trading on events, and some of them can be rather grotesque, right? But it is something that could help people, right? Other than a prediction market, what has the power to actually forecast the future in like a general way? You can't use polls to do that. Polls are not the technology that enables that kind of understanding. Like we have this thing, this platform that has a chance of doing something like that. And so why not just take it to the full level of like what it could possibly do?
Yeah, and I think to dive deeper into the juxtaposition of polls versus prediction markets, I mean, prediction markets probably at scale with enough liquidity have more signal because there's actual cost on the line. And when people are literally weighing the opportunity cost of, if I make this bet, I'm giving up money, like that makes them think harder and really, one would imagine, say what they truly believe. Where when it comes to polling, you go and you poll somebody and they can have the social pressure to say one thing, knowing that they don't believe it. But since there's no cost, it's like, yeah, I'll just say that.
Exactly.
Yeah.
Exactly. And there's also the idea of privacy, right? Bitcoin is this, it's pseudonymous, right? So you don't reveal your identity necessarily. And the way our prediction market operates is you only need a lightning address, right? That lightning address is not necessarily correlated with your identity. And there's plenty of platforms that offer it also without KYC. And so you can just get a lightning address, and as long as you have the liquidity to receive your payout, then you can receive a payout. The important thing for us with privacy is enabling people to be honest, right? I was talking to this one guy yesterday who said that he almost got fired from his job in 2016 for talking about how Trump was going to win, just talking about it, right? And that was in Canada, so you know what that's like. But when it comes to people being able to reveal their preferences and then using value as this measure of conviction, and then being able to obscure the identity so that they won't get harmed for revealing their preferences, then you have a tool that is far more powerful than what we've had before, right? And what is currently available with Polymarket, you know, when you use Ethereum, a lot of your information is connected to a single like public key. And there's people who like use Tornado Cash and like mix their coins, but then also keep their NFTs on the same profile. And then, all of that's connected to their real world identity through like all this KYC stuff. With Bitcoin, you can completely obfuscate all of that and maintain your privacy while enabling enabling value transfer. And that's something that's really powerful, right? Having the lack of that identity connection so that you can be honest. You're allowed to be honest.
Yeah. I mean, particularly over the Lightning Network, especially something like Bolt 12 gets adopted widely, like on that receive. Like if, let's say, the Bolt 12 spec enables the ability to replace something like LN URL, and you can replace your Lightning address with a similar construct using Bolt 12, like that would take it to the max. And then who knows, maybe ecash can get involved at some point down the line. And
yeah. I mean, we've written up like this spec with ecash. The only thing I have, like the issue with it is like I look at some of the libraries and it says like with Cashew, for example, it's like we are not cryptographers. The author is not a cryptographer. There's probably a fatal flaw somewhere. It's like I wanted to use this, but then it's like, okay, if there's a fatal flaw, like how can I trust this, right? Mm-hmm. If we're gonna actually use ecash, then we need like some cryptography work to actually be done, like some real security proofs. Like I did undergraduate math, right? So I know the group theory that's necessary to actually understand the protocol itself, right? It's really simple, basic stuff. You just have it basically it relies on the complexity of a discrete log, which is the ability to find like factor primes, essentially. Like these are basically the same issue. And yeah, like elliptic curve Diffie-Hellman, that's pretty basic stuff. So what is the actual security around that, and also the implementation of that cryptography? If we can like prove out that like, oh yeah, all these assumptions are like valid and everything is good and it's secure, then it's solid. But if we can't, like when we're dealing with cryptography, one of the lines that stood out to me in this book was, you're not just building a safe to keep out your family, right, or your friends. You're building a safe so that when you send the blueprints to every government in the world and every corporation in the world, and you show them exactly how everything works, and then you give them indefinite time to break that safe, then it still doesn't break, right? That's the power of cryptography. And if we don't have that level of security, then how can we like call this something safe, right? And so what I would urge is like, okay, yeah, everyone who's funding ecash stuff, it's like, let's fund some cryptographers to like go and do some work here and like prove out and show that, yeah, this is all valid stuff that can be used, so that we can remove that line of like, this is not a secure thing and there's like a fatal flaw somewhere. Like, let's make it so that we could just use it, because like if we just used ecash tokens as shares, right? And then then the prediction market is essentially an ecash mint that people can purchase shares by like sending payments. They get their ecash tokens. And then if they want to sell their tokens, right? Let's say the event hasn't occurred yet, but they think the odds are way too high. So they can just sell it and then redeem that value at whatever the market price is. Then, you don't even need identity at that point. You just need to make a payment, and then you can just literally download your IOU receipt of like whatever you are like owed by the ecash mint. And I think that could be really cool. I mean, there's so many different other mechanisms to do this kind of authentication without revealing who you are. And as long as we can use some of them to just put together this system where we can totally preserve privacy, then that's the job, right? Like now we have a platform where people can honestly reveal their truths.
Yeah. I was going to say, you got to it, but like I smell bounty here, because that could supercharge it. And then correct me if I'm wrong, but I believe like it would be preferable to build this within a mint because of the ability to create DLCs within a mint, right? Which is much harder, like on chain.
So we did some research into DLCs, like a LSMR based prediction market with DLCs. And the only issue that I have with that is the liquidity requirements and the UX involved, simply because with a DLC, you have your money that you're putting at stake, and then the counterparty needs to put their money at stake, right? And when you're dealing with a prediction market, there's one counterparty, which is the automated market maker. So that's us. So whatever volume of payments we want to satisfy, we need as much liquidity to satisfy that. Right now, we use this thing called the parimutuel system, which is similar to poker or horse racing. It's where everyone pools their money and then the winners split the losers' money, basically. I mean, with poker, you just have the winner takes all. But then in like horse racing, the winners, everyone who bet on the correct horse, they split the total pot that of all the bets. Now, that's really great because, first of all, there's no like inherent risk for the market maker, or at least there's capped risk. We have to subsidize every single market that we offer so that it makes it basically appealing for people to bet on. And so for the election market, for example, we subsidized each option like 500K sats. But with DLCs, we would need to be the counterparty to every single person who bets at every single bet. And that's really challenging to...
Doesn't seem scalable.
Yeah, it doesn't seem scalable. Like DLCs are great for doing like a peer-to-peer bet, right? Like, okay, 60-40, Trump, Harris, and then like someone puts 0.6 BTC, another person puts 0.4, done, like simple. But when we're doing something as complex as a prediction market where you are creating shares and those share, like the price of those shares represents the probability of those events and their outcomes, and then you make those shares tradable on like an open market with this, central market maker, then it becomes way more challenging. Mm-hmm. And it's just a lot easier and a lot quicker to, let's say, get to market if we had this, like secure ecash that we could just use as tokens to enable people to trade. Then like that's way easier. And even easier is just custodial Lightning, which is what we have right now. And it's probably what we'll continue to use until, let's say, this ecash stuff kind of, I feel more secure about it. Like, I haven't talked to too many ecash people, so maybe I'm completely wrong. But if we have like those security guarantees that like, the cryptography is secure, the software is secure, then it's like, that just seems like an optimal method to preserve privacy while maintaining this all the feature set that we want.
This rip was also brought to you by our good friends at Salt of the Earth. You got to be hydrating, freaks. And while you're hydrating, you got to be getting your electrolytes. This is the best electrolytes mix that I've ever come into contact with. Pink Himalayan salt with calcium, magnesium, potassium, sodium, no sugar. It tastes incredible. My favorite is the orange and the pink lemonade. Go to drinksote.com. That's drinksote.com. Use the code TFTC when you make your purchase, and you'll get 15% off. I'm telling you, get on it, freaks. You're going to love this stuff.
I mean, going back to like diving into what the technical architecture is right now and like pulling Polymarket back in, just comparing Bitcoin prediction markets stack to Polymarket. How much more simple or complex is it?
Oh, it's like super simple. Like we have a node and then a back end and a front end, right? With Polymarket, you have Ethereum, you have the Gnosis tokens, you have like this UMA Oracle network, and then you have their front end, right? And so when you have, like their side chain that's connected to Ethereum, that's like this Oracle layer that is offering staking for 30% APY. There's so many places where that complexity can lead to some kind of exploit, right? And I'm not saying that the Lightning Network is free of exploits, right? Like when we're using a custodial solution, it's tough. But when it comes to the simplicity of everything, we're just literally Bitcoin in channels, and then people can just send us Bitcoin to place a bet. And when it comes to the UX, right? Like as long as you have a Lightning wallet, boom, you can place a bet, right? And you don't even need to sign up. You can just scan the QR code and send the money. With Polymarket, you need to like authenticate. Now all of your bets are connected to your identity that you authenticated with, which is connected to your KYC stuff that you got from your USDC that you got from your, crypto exchange. And it's all on this like mega centralized L2 of Ethereum. And, when it comes to the economics of these L2s, I saw recently, like, I think Base is the largest Ethereum L2, and they're paying $1,000 a day in transaction fees to layer 1 Ethereum. With Bitcoin Lightning, it's a lot simpler, right? You just lock your Bitcoin up in channels, pay that transaction fee, and then boom, you can send payments back and forth. You want to close the channel? Okay, sure. like simple, decentralized, actually peer-to-peer as like, a payments network. When it comes to the layer 2s on Ethereum, it's a lot more complex because inherently everything that's on Ethereum is a lot more complex, and the incentives are a lot more complex. And then the smart contracts are a lot more complex. And all of that complexity adds up over time, right? So that when you start out with something that's really complicated, maintaining it is going to be complicated. And then building on top of it is also going to be complicated, right? So all we want to do is create something that's simple, that does the job, and that can be secure enough so that it enables this there's this motivation for mass adoption of Bitcoin, of people. If they want to participate in this market, then all they need is Bitcoin Lightning, right? And that's something that is, I feel like, a much better sell than like, okay, you got the side chain on this other shitcoin, and then you use, this stable coin to be able to do like all the different trust assumptions involved there. Like with this, it's just Bitcoin.
Yeah.
Right.
And like how I will admit I'm a bit ignorant to this, but like Polymarket, have never used it. Like how are they pricing things? Are they pricing things in dollars? Are they pricing in ETH or pricing in token? Yeah. That's the other thing, like just keeping it simple and using Bitcoin as the unit of account in the Bitcoin prediction markets. Like that's another thing that appeals to me, is that everything's denominated in sats and you sort of have this jump to the unit of account within your market. Exactly, yeah. And we just showed like the odds or the probability, and that's calculated really simply at the moment. We of course want to use the logarithmic market scoring rule in the future and enable all this complicated trading, but right now it's really just the amount of sats bet on yes divided by the total amount of sats bet, right? And what's funny is Polymarket is now trending towards the odds that's Bitcoin prediction market. Like literally today I saw Polymarket is somewhere like 65% Trump, and right now on Bitcoin prediction market it's like 67%. I think yesterday it was like 69%. So even though we use this supposedly more primitive market making algorithm and this prediction system, it's still somehow really accurate, especially compared to all these prediction markets with like much higher liquidity. And one thing that I think that might be the cause of this is people can't sell their shares. It's kind of like an auction-based thing, so people can just buy. And once they've paid, they've committed their money there, right? If you want to bet on the other one, then now you need to just bet more on the other one so that you can recoup what you've previously bet. And so by locking in this kind of bet, maybe that kind of changes perception as well. Like, okay, now I need to think carefully before I place this bet. Is it the right time to do so? Are these the right odds that I want to go for, right? And there's the negative externality of, you can't sell your shares, but if you're this late in the cycle as we are, then you've probably made up your mind as to what's going to happen within the next few weeks, right? The next couple of weeks. What is today, 22nd? 23rd. We are... less than 2 weeks away, which is crazy to think. I can't wait for it to be over. Oh yeah. It's been exhausting. But one of the tried and true problems that arises with prediction markets is the Oracle problem. How are you guys approaching the Oracle problem? So right now we're the Oracle. Mm-hmm. Super simple, right? The way that we're trying to resolve all these markets is through overwhelming consensus. So we have currently election markets, Bitcoin price market, and one market on if the U.S. will leave Lebanon, like the U.S. embassy. When it comes to these markets, we don't want to resolve anything prior to, let's say, major news outlets reporting, the state talking about it, and also other prediction markets, right? Polymarket, Kalshi, these markets with much higher liquidity. Right now, it seems like no matter who wins the election, there's going to be a dispute. And the precedent has already been set with, I think 4 years ago, right? There was the storming of the Capitol. I feel like no matter what, some shit is going to hit the fan. And we might need to wait on releasing the payouts just to be sure that whatever result has happened is the thing that's going to continue to be the truth. In the future, of course, it would be nice to have, let's say, incentivized oracles to report and who are independent. But I was actually talking with a few of the other
people interested in building Bitcoin prediction markets. And we were talking about how we could have like a federation of oracles, right? As like a federation of prediction markets, and we all resolve in tandem. So we there's these guys, PredictX, and these other fellows from Albi. They're interested in creating these prediction markets, and quite possibly it could be all of these different prediction markets that are themselves oracles and themselves resolving together, so that there's no kind of issue when it comes to, let's say, an independent resolution. And the incentives are in place, right? Like if one prediction market screws up, then why would you use them in the future, right? If they're dishonestly, being an oracle, then you can't trust them anymore. And it's that trust that allows the prediction market to continue to operate in alignment with the values of everyone else, right? Like, prediction markets are not peer-to-peer digital cash, right? Satoshi created this system of Bitcoin so that you have digital cash without trusted third parties, right? Or you've minimized that trust. You still have miners and pools, and you still have nodes and individual users as well, right? And so he was solving a very specific problem when it came to building this solution to this digital cash problem. And we've kind of extrapolated these values and placed them in all sorts of different areas in Bitcoin. Some are good, right? And some are also preventing a lot of innovation in Bitcoin, right? Because not everything can be this trustless compute machine that's independent of the interference of other people, right? Like, at the end of the day, we're building a company. We're not building this free and open source protocol that's just supposed to run on people's computers and kind of just exist and help people. Like, no, we're building a company to make a lot of money and like provide value to our customers, our users, and anyone else who interfaces with us. And to do that, it requires trust, right? Trust between myself and my co-founder and our team, trust between us and our investors, trust between us and our customers. And this trust is not a bad thing, right? It's bad if you're trying to create a digital currency, because you look at every other digital currency that was created, right? Mojo Nation or e-gold or e-bullion or Liberty Dollar, all these different projects that either failed or the founders went to jail. There was a real problem with this centralization of authority, and Bitcoin solved that. But now that Bitcoin solved that, let's do stuff with it, right? On top of it, and do stuff that, requires some level of trust. But if you don't have that trust, then you can't really get kind of complex with it and do fun things.
Yeah, I completely agree with that. And I think that's, trying to think of how to phrase. I mean, I think within the world of broader crypto, they've completely run with this narrative that we need to decentralize all the things. And I think objectively that is idiotic, and that's being proven out in the market over time. But even within Bitcoin, there is this idea that you have to trust minimize every single application that you interact with throughout your daily life, and that's impractical. And trust is not a bad thing.
Trust is not a bad thing. It's funny, when I was reading the book Debt, the First 5,000 Years, and David Graeber talks about debt, which is usually seen as a kind of, there's like a negative connotation with it, right? But there was, I think, this Christian monk early in the 1500s who wrote and celebrated debt because it was this thing that tied everyone together. Without debt, people would be atomized entities that don't owe each other anything, and there's no need to, let's say, cooperate or do anything together. With debt, though, someone owes you something, you owe them something. That keeps kind of the relationship going in many different ways. And this debt requires trust, right? In societies where there's minimal trust throughout history, there's been maximal use of coin, right? Cash. Why? Because if you're a conquering army and you're soldiers who, travel to distant lands, you plunder a different society, you take their treasures and you melt that into coins, and then you use those coins to pay off your debts. This has happened time and time again. So when you're in a really low trust setting, then cash is really great. If you're in a really high trust setting, then debt is fine. And debt is the original unit of account, really. Like, it's something primal and innate. You know all the friends that, oh, you would drink because you've been buying their drinks for a really long time, right? You know when someone has, let's say, been getting too many favors and you're like, hey, you know, like you got to do something here. Like when I was a kid, it was like I went over to my friend's house and then he went over to my house, right? Like there's this kind of balancing out of the scales of relationship. And Bitcoin being, now that we're in like a kind of low trust era in online digital commerce, it's managed to kind of be this thing that people could use without trust, right? And that's great. But again, building on top of it to provide, let's say, goods or services, products built on Bitcoin, you need some level of trust, right? Or else there is kind of no way that you can go about creating something that can do things that are more complicated.
Yeah. No, and I think one of my favorite anthropological examples of when shit hits the fan, people falling back to trust and particularly these debt credit relationships is like Hurricane Sandy in New York, particularly in lower Manhattan when the power went out and bodegas couldn't access their card readers. And there's many stories that came out of if you've lived in New York and you had your local bodega, you inevitably develop some sort of relationship with the man behind the counter that owned the bodega. And there were many stories that came out of like during that week-long period where the power was out and they couldn't access the card readers, that they literally had pen and paper, just like doing a credit system. And while the power is out, people were still able to get goods to feed themselves and get tobacco, whatever it may be. And then when the power came back on, they went back and settled their debt.
Yeah, exactly. And that requires trust, right? And those trust relationships are built within local communities, not within, let's say the broader online digital ecosystem. Now, if you want to do something in the broader online digital ecosystem, yeah, that trust needs to be there, right? And you see that with some of the largest businesses in crypto and Bitcoin. They're trust-based inherently, right? You look at Binance and Coinbase. For the vast majority of people, they're okay with keeping their coins in the custody of someone else, right? And that's not a good thing, right? Security-wise, you should own the keys to your coins and keep them in a hardware wallet and, cold storage that. But it just so happens to be a lot of people have that trust. Yeah. And that's just a fact of nature.
Yeah, I mean, there's a spectrum to all this. I mean, you can apply it to the broader crypto industry and exchanges where, like here in the U.S., like our debt situation, like I think it's inarguable that the amount of debt that the U.S. federal government has racked up is inordinate and not is a net negative for the society here in the United States. In the long run, that trust contract is, I mean, for me personally, it's broken. Like I don't trust the government to issue debt and provide me goods and services that give me confidence that we'll be able to pay that back in the future. And I think many more individuals are coming to the same conclusion, but again, going back to your example, like that is not local. Like the U.S. government concentrated in D.C. is making these decisions for 350 million Americans, whatever the number is now, 330 million, who are dispersed throughout the country. And there's this information disconnection between what is actually needed on the local level as opposed to the federal level that has allowed the government to abuse the trust that American citizens have in regards to them issuing debt.
Absolutely.
On behalf of all of us.
Absolutely. I feel like that's the power imbalance of the state has been historically abused, right? Like in James C. Scott's book, Seeing Like a State, it's recorded throughout history how the people who live in the hills, they often farm like root crops, right? They're roots so that you can't pay taxes on them. These people, they don't want, let's say, state interference to define the terms of their land. They often have small communities in which there's high levels of trust and people can just live communally together, right? When the state gets involved, it treats people like cattle. In Europe, for example, in England during feudal times, the state's job was to demarcate the land and collect taxes on that. when it came to forestry, what they would do is try to see how many logs that they could get out of it, how much wood was available in the forest, and quantify that, and then extract resources, right? It's inherently parasitic in this kind of way. And it's not unique to the US government. It's just unique to pretty much every government in every state. Like when you have the people who have decided that the main way they're going to eat food is for other people, and saying that, okay, you will pay me taxes and I will enforce the law, and if you screw with me, then I will destroy you. That mode of being has been internalized by all of us, right? Because we can't escape it. There are these extremely powerful people who have that opportunity to do something like that. And so the one thing that we can do is comply. And I feel like the biggest way that it has been exposing itself most recently was with COVID, right? Without COVID, I wouldn't have been a Bitcoiner, because that's when I was really getting into the crypto scene, and then also reading Andrew Bailey's papers on money without state, and really seeing the power abuse of the state, like in Singapore, where I was. It was a complete authoritarian shithole. Like, you had literal robot dogs monitoring the migrant workers who are essentially treated as slaves outside their migrant worker dormitories, and there was no freedom, right? Like, I lived on a college campus, and we had to get our QR code every day so that we could eat food at the dining hall. And if we didn't submit our temperature and show a picture of the temperature checking machine, then we couldn't get that QR code to show at the dining hall to get food. Literally, my visa in Singapore, I wouldn't have been able to get it to start my business if I didn't get the injection, right? And so when you have a really small state, then you can really milk the citizens and highly control them. And any people who live in that country, especially in a digital state era, it's really there's the security state, who's, with the elite families, the intelligence organizations, and then they're pretty much, living off of the tax yield of the citizens. And that's one of the big reasons I was like, oh yeah, money without state is a good idea. We should use Bitcoin. Bitcoin is the future.
That's pretty great. I didn't know that backstory. And it's not only the tax yield that they get, it's just the printing of money too. They can just print debt and use that to garner more power to control citizens. And so what was the exact moment for you where oh, it's Bitcoin?
Oh man, the exact moment. I feel like I was in New York. I was visiting a friend, one of my good friends, Nick. He was my roommate. And he had invited all of us, myself and my roommates, to New York. And this was during the Omicron, outbreak or whatever. And
the variant.
The variant and all of this craziness. It was my first time in New York, and that was a pretty crazy time to be in New York. And that's when I was reading all of Andrew Bailey's papers on money without state and a moral monetary design. And that's when I realized, oh crap, this is actually this is the signal in all of the crypto noise. There was so much crypto stuff that I was looking at because I was working at this consultancy doing all this research into all these different protocols and finding out, okay, yeah, this is just seigniorage. This is just seigniorage. Okay, everyone's just trying to print money. That's the main, profit mechanism of crypto. So then what's the actual signal here? There's so much noise that's going on. When there's smoke, there's fire. So where's the fire? And seeing Bitcoin, money without state, and seeing the just total abuse of state power, and seeing how this was even before I watched the documentaries on the Federal Reserve and the money printing, and even reading David Graeber's Debt. But after I understood that Bitcoin was this money without state, then all of these different pieces to the picture came into my view. I was reading David Graeber and Debt, and I realized oh crap, money printing, increasing the debts of people. It's because I was in school at the time, in university, and I was it's just giving people more assignments when nothing is, they have no reason to do more work. But now the reason is that the government wants you to do more work, right? That's how, in Singapore, that's how people are controlled. If you talk to any ordinary Singaporean, they're overworked, right? They're probably working 2 jobs, right? Maybe doing their regular salary work, going to an office, and then on the side, they'd be driving for Grab, which is the Uber of Singapore. And they never have enough money. Why? Because basically what the government does is they take some portion of your salary, put it into a retirement fund, but they control how you spend that money, right? So it's completely permissioned money that you have no access to. And they're saying, oh yeah, we'll help you out by making you save your money and telling you how to spend it. And what people are left with is very minimal cash, right? And what do they need to do with that cash? They need to pay for their mortgage. They need to pay for their housing, right? 90% of Singapore has publicly controlled housing, right? And why? Like if you look into the history, it's because when the Lee Kuan Yew and the other fellows came into power, they burned the kampongs, which were the native housing of the people who lived in Singapore, and then they constructed the HDBs. So all of the people who were in the native housing, they had to go live somewhere, and then they now have a place where basically it's completely government controlled and run, state controlled, and the prices could be set, right? So they deliberately set the prices so that it's basically you have barely any money left to do anything else. And so now you have an overworked population with just people who, can't think, right? Because they're just completely overworked. And that's a microcosm, like one state doing that. But then every state is doing that in some way, in some respect. The US government does that, but it does it through inflation. It does that through all these other different mechanisms and levers that, are basically price controls. And now people can barely survive because they're controlled with money. And this is what Carol Quigley talked about in Tragedy and Hope, when it's like the vision of the elites was to create a, rather than have like slave-based control where people were owned, you would have monetary-based control where people could be simply controlled through the levers of the monetary system. And that's basically what's happened till today, right? Like that's one of the things that I saw when, after I learned about Bitcoin. And then another one was on thermoeconomics. Basically this work from Friedrich SOTE, who was a Nobel Prize winning chemist. And he basically talked about the dangers of debt and compound interest, because thermodynamically speaking, everything is deteriorating, right? Entropy is always increasing. Mm-hmm. And so things lose value over time. That's just depreciation. Now, if things are always losing value over time, what's the one thing that always gains value over time? It's debt. It's compound interest. That compound interest is exponentially growing, mathematically decided, and it uses the violence of the state to enforce itself, right? So if you have a world where you allow debt with compound interest, then that's an asset, that's a thing that always increases over time. Therefore, if you allow it, then it will eat up all of the value of the rest of the world. Now, he wrote this just after the Federal Reserve was created. I think it was like 1920 or 1921. And his prophecy was that in 100 years, there will be no value, just debt. And it will all be controlled by a few people who control the debts. And that's what happened, right? Yeah.
You're well read, sir. This is.
Well, I had to do my research.
No, it's funny. I mean, one thing I wanted to point out is particularly your description of Singapore. It's fascinating to me because the narrative that's fed to Westerners, particularly people in the tech and finance and investment sector, is that Singapore is this almost utopian experience in Southeast Asia that's high trust and highly functioning. But it seems like you're saying it's not as it's portrayed.
If you are one of the privileged few who can be an expat living in Singapore, working your corporate job or your tech job, and you can just go to the office on the MRT, and then you can go to the country club in the evening with like your family, and it's great. Like I've met people who live like that. Like the upper class in Singapore are having a great time. It's incredible. But then when you look at the vast majority of the people in Singapore, it's a much different story. And I've been fortunate enough to gain exposure to both sides, right? To the extreme upper echelons where it's like, you're talking about like donors to like schools and like art collectors and all of that. Like, and then I've also gone to the most, downtrodden people of society. And you can see when it comes to like the upper echelons, you're living like anywhere else in the world except it's in Singapore and the airport is close by and you have all this like nice food that you can get on Grab and it's like chill. But then if you're in the lower class, it's a much different story, right? Like you're talking a lot of the things I can't say on camera because it's people dealing with the stress and trouble of exploitation and effectively slavery, right? A lot of people in Singapore, especially in the lower classes, they have a really difficult time. Multiple jobs, no sovereignty of thought, right? Like people are not equipped to think for themselves. They're equipped to obey the state. Like the education system, and this goes for pretty much any education system, I'd say, is a system of indoctrination. It's telling you what reality box you should basically format your consciousness in, and then how you need to interpret events so that you are satisfied with being where you are in the social system. And for the vast majority of people, like when I talk to people who are, on that like lower end of the spectrum, they're saying, oh yeah, no, it's fine that I'm here because all the people who are super successful, they worked for it. How can I, I can't be jealous. Like it's their right to be like that. But then oftentimes when you see the story of how a lot of these people became successful, it was stepping on the necks of other people to get there. And, it is kind of like a dark reality of the way the world works.
And it's a different narrative on Singapore than I've been fed here in the West. I mean, all the Silicon Valley tech bros think it's, again, this utopia that is a model for the world to replicate. And it's very interesting to get this perspective. And I mean, bringing it back to Bitcoin more broadly and having a tool at our fingertips that we can use to liberate ourselves from these oppressive measures that are thrust on us by the state. Like, do you have hope that we can actually do this?
I feel like it's not about necessarily having hope, but giving people the tools and the knowledge to be able to do so. And there's this one really powerful concept and idea that I read about from Ingo Swann. So Ingo Swann was basically he co-founded the Stanford Research Institute with Russell Targ and Hal Puthoff, and they were doing a lot of this remote viewing work.
We're going to get into remote viewing. I love it.
Yeah. So I read like the declassified files on like Project Stargate and the other, stuff.
Let's explain remote viewing to people who may be a bit ignorant to the concept who are listening.
Yeah, so basically it's people being able to see into other places psychically, doing so basically with telepathy, like clairvoyance. And this kind of ESP phenomenon has been routinely debunked, right? Like it's people who, let's say if it were possible, would the people in power want you to know it's possible? Definitely not, right? Definitely not. This is something that is like a no-go zone, right? But it's funny because if... And what we've done is we've basically created a reality where people will filter this information out, right? For the vast majority of your viewers, they're probably laughing, thinking like, oh yeah, this is so stupid.
I'm picking out what you're putting down.
Right?
Yeah.
But when it comes to the kind of labyrinth of powerdom, right? There are no power schools. There are schools, right? But there are no power schools. There are no schools to figure out how you can get more power or empower yourself, right? And there's deliberate reason for that. It's because if we think of ourselves as creatures of power, like power creatures, where we have the creative capacity to do incredible things that most of us wouldn't even dream of, then the most powerful thing you can do is harness that for your own utility, right? And that's what people have done through all of these different structures, like the state, like a corporation, like the different ways that we've entrenched our own social systems, right? And Ingo Swann talked about how, there are no power schools, and any sort of direct way to empowerment is usually it's getting diverted. No one will tell you how to do it. You got to figure it out yourself, right? And the same goes with Bitcoin. As an empowerment technology, you need to see through the illusion yourself in order to actually gain empowerment. Even if you want to use, if you're formatted against your own empowerment, then there's no way that you can actually get empowered, right? And this is not to say anything about like remote viewing or like to get into all of like the whole conspiracy angle. Like we don't even need to use those.
You don't want to talk about the Getty Museum in LA?
Well, what's the Getty Museum?
No, this is, I don't want to interrupt your train of thought, but just slight tangent. Like the Getty Museum, like there's a theory that it is the epicenter of like underground cities that are protected by remote viewers who basically try to see if people are trying to figure out what's going on there.
Yeah, I mean, I haven't heard about that, but I know for sure that like, yeah, you know, it's a hot topic that's really controversial, and you know, I don't mean to promote any one angle specifically, right? Like if you are interested in learning more, then you could read the Stargate files or just look into, let's say, all the declassified files that the CIA have released. And you know, Jimmy Carter talked about it. He talked about how they used remote viewers to find like this missing plane in the middle of the Atlantic Ocean, I believe. And yeah, after he talked about that publicly, they shut down the program and they moved it to a different thing. So I'm guessing they're still probably doing it because it's a really powerful thing to be able to do. But of course, it's only for the initiated. It's only for the people that the ones who control deem worthy of that kind of power. But as, let's say, a power species, if we were able to empower ourselves, would there be widespread knowledge by the powerful to enable people to do that? Probably not, right?
That's why the NPC meme exists.
Exactly, because
they want everybody to be a non-player character.
Exactly. They want everyone to be subservient in some way, or just don't rise up. Because if you are in competition with them, the ones who have a lot of power, then you're a potential threat, right? And the thing about Bitcoin that is that doesn't align with the powerful is that they can't stop you, right? If you use the currency, right, it's the negative liberties that are protected of Bitcoin, right? It's the fact that the cryptography is so secure that nobody can prevent you from spending your coins or receiving your coins, right? Unless you have a quantum computer. If quantum computers become a reality, then we need to fix Bitcoin because they can.
We need to fix everything if quantum computers.
Yeah.
It's not like everybody's like, oh, Bitcoin's fucked because of quantum. It's like if quantum comes, everything's fucked.
Yeah,
like,
pretty much.
That's a back to the drawing board type situation for everything. But running with the assumptions that quantum isn't here and the cryptography is as secure as we know it to be mathematically, you can prove it. Bitcoin is this empowering tool that allows you to break through the NPC malware that's been downloaded in your brain.
Exactly.
Yeah. It is this is the most like jacked up I've been during a conversation in quite a while. This is a very unique way to describe Bitcoin, and this is what, Logan, episode 560 probably around there. 552. Wow. 552. 551 conversations before this one, and you just framed Bitcoin in a way that has not been framed on this conversation. So it's pretty awesome.
It's really, I think, the central thesis that I go with when it comes to Bitcoin, and also with prediction markets as empowerment tools, right? To be able to see the future is one thing, right? And to be able to see it in a way where we have a glimpse at significant events, right? When I mean significant, it foreshadows something, right? This event is, let's say, the cause of some effect that will be felt globally, right? Prediction markets, I feel like, would be wasted if it was just on sports, right? Like when it comes to what things matter, it's like bread and circus, right? I want to look at the bread, like all of the different ways that could get disrupted or it could be proliferated. The circus, there's always attention on the circus, right? But the fundamental things that make up the nature of our physical reality, right? Like we look at everything that's in this room everything that's in any room from people who are watching, all of these things were stuff that used to be a thought in someone's mind, and then they worked with their creative impulse to make it something that's in the physical world in reality, right? And usually that's what happens with pretty much anything, right? Like geopolitically, Bismarck first thought of what he needed to do before he actually actualized that on the European chessboard, which later manifested in war, right? And tremendous conflict and many people's lives being disrupted or killed or whatever. Most of these decisions are behind closed doors, right? Most of these thoughts are just locked in people's minds, and they don't reveal their intention before they act on it, right? But if we can get a sense of what that might be and have a focus on that, and then drive, let's say, betting action towards it and transmute this negative energy of, let's say, speculation, which is deemed to generally be like degenerate activity, into something that's a forecasting of a future event, which is very significant because it foreshadows many different like effects, then that could be an empowerment technology, right? Most people can't have that glimpse into the future. Only the, initiated few who've passed the ranks of the secret societies and the intelligence organizations and
in the war game room.
In the war game room, exactly, right? Like, let's bring that into the public eye and let's see, like, okay, if it's actually available for people to see, what might happen then?
Yeah. Is it a double-edged sword in your mind? I mean, earlier we discussed the potential positive externalities of seeing the probability of a future event and working to prevent it, because it would be a disadvantage to society for it to actually happen. Alternatively, conversely, like, could it be used for bad? Like, people, let's say they have a big bet on a bad outcome happening, and they don't want to lose the money they put on the line, so they work to ensure that the bad outcome actually comes to fruition.
Well, that could be possible, but I feel like observation changes reality, right? This is a known phenomenon in particle physics, in optics, right? Yep. Like, if you shine a photon at, like, some kind of event, then it changes it from a probabilistic thing to an actual thing, right? And if we think of the world as the kind of manifestations of the collective dreams of humanity, of what people are thinking about doing and actualizing that in the physical world, then having this prediction market where people can see potential futures, that creates, let's say, this potential for observation, right? And that observation changes reality because that affects people's internal consciousness. And yeah, some people could try to use it as like a power play to gain more power and more money by manipulating the market. Others could use that to negate those forces, right? Of course, with the prediction market, it's a capital market, so capital can manipulate, right? You could also think of that as capital can subsidize. Anyone who sees through the illusion of someone else trying to prop up some event can make money off of that, right? And we've seen that in Polymarket, at least with the Israel-Lebanon markets. It looked like there was some manipulation going on, like some serious bets were like pushing the price down, pushing the probability down. But then they came right back up, right? Rebounded like within a day. And I think that just goes to show the robustness of such a market, right? Now, that's just one small example. But let's say we have many examples of lots of that happening, lots of attention, lots of capital. Then will people simply, when they see certain odds occurring, how will they act? How will that change? I don't know, right? But if it becomes to be an important thing, then a market is far more difficult to manipulate than a poll, far more difficult to manipulate than a news article or a video. It requires that sacrifice. And when it comes to Bitcoin, it's the ultimate sacrifice of value because it's Bitcoin, right? Finite supply.
Yeah. It's going to be the first time I drop this in a while. Shout out to you OG freaks at TFTC. We're getting cosmic here. But like continuing that thread of thought, particularly about what I just said, I guess, with observation affecting consciousness and running with the assumption that we have a bad actor trying to manipulate, maybe not even manipulate the market, but manipulate an outcome to reap the benefits of the bet he made within that market. Like, is this prevented by most humans, like running with the assumption that most humans are good innately at the end of the day, and like consciousness of most individuals is such that they would want a positive, peaceful outcome?
Yeah, I firmly believe that most people don't strive for more conflict. Like, we need to be programmed in that way to want more conflict, right? Like, this is something that's taught to us, not necessarily something that is innate. Of course, there is that component in us, right, which is this kind of like resistance, right? Like resistance to authority, resistance to whatever is something that's imposed on us, right? And I think that's just another facet of the fact that we're all power beings with the creative capacity to do just about anything. And for us to be channeled into doing what we do, there might be all these different forces that are pushing us, right? Now, with prediction markets, there always is this possibility of manipulation. Like, if you look at sports betting, like how many times a ref makes a call or does something, and then they also have money on the line somewhere, and they use their power and authority to manipulate the outcome so that they can make more money. Like, this is something that's very old and happening for a really long time. When it comes to prediction markets, you know, something similar could happen, right? Who knows, like, what the bets are with in the presidential race, right? Like, the one thing that I do know is it's always possible to throw the game, right? If you are doing something, if you are in the midst of making something happen, then there's always the possibility that you stop. And if you bet that you'll stop, or if you bet that something will fail and then you deliberately fail, that's something that can be engineered, right? And it's an inherent risk with any of these markets that we would offer. There's always the possibility, if it gets big enough, that the actors involved can just throw their own game and profit. But if they have a vested interest in that outcome, then it's more of a competition, right? Because why would the Democrats want to throw the election right now when they still could have a chance, right?
Yeah. That's what excites me the most, is that the emergence of these more robust prediction markets is beginning to happen. Because I think that's the other thing, is we're having a lot of these, we're having a theoretical, hypothetical conversation about what can and may happen, but like you said, reality doesn't happen until it's observed. And so, like, as these things become more robust, I'm sure we'll learn how people interact with them and how they actually affect the world external to those markets. Exactly.
And that's just something that we can only speculate on right now. Yeah.
I'm happy you came to Austin.
I'm happy
this
too.
This is much better in person. I can't imagine this conversation over a video call.
Yeah.
I mean, and it's like we're diving deep into this one particular topic, but that's why I was pumped to meet you in person in Riga, because I think outside of prediction markets, your views on Bitcoin generally and some of the things going on within Bitcoin are just, again, very unique, and you have very, I don't want to say opinionated, but you're very convicted in your views of how Bitcoin should work. And so just like outside of what you're building at Bitcoin prediction market, like what else are you paying attention to within Bitcoin outside of the mining stuff?
Yeah, I mean, outside of the mining stuff, it does look like there's a whole lot of shitcoinery coming back to Bitcoin, right? Which, I mean, you know, the shitcoiners see the signal. They're like, okay, time to grift again. You know, they can raise more funds and push their propaganda and get people excited about, you know, whatever they're shilling. But fundamentally, I mean, Bitcoin as an empowerment technology is going to be under threat for sure. Like Craig Wormke from the combo fellas who created Resistance Money. They wrote Resistance Money. Shout outs to them. Best book in Bitcoin, talking about, you know, just no bullshit when it comes to if you want to orange pill someone, that's the best book to go for. And Craig is working on a research paper right now. I maybe shouldn't say, but this is really relevant on how Bitcoin can resist a feather fork.
The feather fork?
Yeah, a feather fork. So a feather fork is basically how the U.S. government would censor Bitcoin. They would do it by making pools mine only on compliant blocks. So not just mining compliant blocks, but on top of compliant blocks, right? And that's really dangerous because once you simply allow, Bitcoin to be compliance money, now you no longer have that, like, someone can, it's like, it's not the fuck you money anymore, right? That's the whole point of Bitcoin, is to be this peer-to-peer digital cash that can't be stopped. If some actor can stop it, then, you're kind of screwed. And right now it doesn't look like the Chinese mining pools would be interested in complying with that. They've got their own agenda going, right, which is largely shitcoinery. And, with China, I feel like a lot of it is just really about business, like as the world's factory, they kind of just do a whole bunch of stuff, but they're not really too opinionated on like what really happens at this kind of like political level. So I feel like it's kind of a hedge against, let's say, OFAC doing a whole bunch of shenanigans. But, if they do decide saying that like, okay, yeah, Bitcoin needs to now obey US sanctions law, then the pubcos will absolutely comply. The pools who are within the reach of the U.S. government will definitely comply. And if you get enough hash rate to comply, then it becomes unprofitable for the other pools to, not comply, for them to resist. So they could just adopt a policy like that, and that could screw a whole lot of people.
Do you think we need to adopt Luke Dasher's perspective on this?
I mean, he's definitely not backing down. So it's good that there's like the diversity of view here. I look at ordinals pretty frequently because I find it fascinating just seeing another free speech tool kind of pop up, right? Like there's Nostr, and Nostr is also getting under attack right now by like all these illegal images being popped up. That's going to question, the censorship resistance of the whole system, like how the relays and the developers deal with that. But when it comes to ordinals, a lot of it is innocuous. Like most of it is just people posting memes or like, art. I think that's cool. The only thing I'm worried about is the attack vector, right? And if, it's you would need to, let's say, build some sophisticated software in order to detect all of that stuff and, kind of just not include that. But it would be a rightful use of, let's say, censorship technology. But again, once you enable that for one thing, then you can enable that for a whole bunch of things, right? And I feel like it's one of those use cases of Bitcoin where, okay, the road to hell is made with good intentions. There's once you enable real freedom, then you might see what real freedom looks like, and then you're like, oh fuck, what did we just do, right? And I feel like that might be like a moment there for Bitcoin itself, right? Like, oh, what did we just enable? Like, yeah, there's a whole bunch of kind of really innocuous stuff like art and just memes, but then there's also it could provide some attack vector.
You don't want the libertarians in charge of. Yeah. It is fascinating. It'll be interesting to see how all that plays out, and intuitively, since it launched, like the old ordinals inscription thing is really like I think it's noise from the token perspective. I don't see why there'd be any value in it. And then two, like the attack vector it opens up, not only from the one that you described, but like the chain bloat. I'm a big fan of smaller blocks and just build things in layers.
Yeah, me too. I mean, I just like we keep it simple, right? Simple is best. What does simple look like? It's just things kind of going with like we're not trying to do too much, and it's always possible to do too much, and that's what I learned in, the startup journey with myself and my co-founder. Like at first our products were really complicated. The vision was really large and super big. But over time, after many failures and many iterations, we've learned to just kind of simplify as much as possible and like cut out all of the crap that doesn't need to be there. And when we're talking about, let's say, Bitcoin being this thing that replaces all these other blockchains and cryptos. It's like, well, maybe those cryptos solve the problem that the people who use them want, right? Which is maybe to fulfill a dream of some bullshit like get rich quick scheme, right? Or like a freaking NFT platform where you can scam some people into like buying your, digital trading card or whatever. Like, I was working on an art marketplace right before the NFTs popped up. Like, I was thinking, okay, digital art, there's like something that needs to be done here. I was previously trying to be a music producer and like making my own beats, putting them online, like
Jimmy
marketing
Beats.
them. Yeah, Billy Hung Beats. That was
Billy
my
Hung Beats, there we go.
Yeah. And that was fun, but it was tough to find unique digital art to kind of brand myself and make myself like unique as like a visual presence in like the social media landscape. So I thought, okay, yeah, art licensing would be a way for artists to make some money and for me to like get my brand out there and have like high quality visual art. But right during that time, like our biggest sales were from people who wanted to take this art and turn it into NFTs. That's why they were licensing it and buying like exclusive licenses so that they could just kind of pump and dump with someone else. And I can see it. I mean, like artists are incredibly, it's really difficult to make money in art. It's a super elitist group where like, unless you are the ones favored by the people who buy art to like,
it's the whole power structure we were talking about
earlier. Yeah. There's a whole power structure. And if you want to make money otherwise, okay, yeah, NFTs, sure. Like just kind of sell it to some fans who want to like collect it. I can see that, right? Like I can see it even more than, let's say, value for value. I mean, this is a controversial thing from like in the Bitcoin space, but it's like, I pitched a lot of artists like products that, dealt with like micropayments and the kind of value for value schemes, or even like betting on art, music kind of combos. And a lot of them were like, I don't want your pennies, first of all, like take that shit out. Like, I don't care. I want a lot of money. And then also if I'm using a product where I make my art, you have value next to it, right? In terms of sats or USD or whatever, then it's like, that's now about the money, not about the art, right? And that's a big criticism of NFTs as well. Like people were like, okay, now it's not about the art, it's just about scamming people, right? And even AI, right? Like when you, like my brother, he makes music, and when he put out a lot of music with like AI album art, he got a lot of hate because it's like people are like, hey, use real art. Like this AI stuff is not art, which, I feel like at this point in time, we can pretty much tell what looks like an AI prompt generated art. I feel like it's a lot more difficult if you like combine multiple images with like Midjourney. Like I've done some like Midjourney art myself and I really like it, but I'm not gonna, just like try to pump it as like an NFT. This is just for my own like decoration at home, let's say, right? And there's like the possibility of uniting Bitcoin with music, with art. It's a really challenging puzzle. And I was thinking about it for a while just because of my own experience in like art and music and my own knowledge of like Bitcoin and like financial technology. And it's like, first of all, to make it as an artist is really tough. But to make an art music business, that's even more difficult, right? Because you're trying to actually create something for a whole bunch of people who mostly don't have money anyways, and who are mostly trying to like get fans or get listeners or blow up, get more engagement, etc. And when it comes to the traditional music industry, there is such an entrenched power structure there that is so difficult to overcome, right? That for me, it looks like a near impossible task to attack that, right? Like when we're talking for your music to get from your like DAW, your computer, all the way to the Spotify. And let's say if you have like a label, if you have all these different, there's so many different rights organizations and legal entities that take a cut here or there just because, 100 years ago, like publishing companies would be the ones that collect royalties on the books that you published for like, music, like the way that a lot of pianists made money back in the day was they would publish a book on all of their songs, and then that book would get like publishing royalties. And then now, artists today still collect publishing royalties, but it's not because they're publishing books, it's their music on Spotify, for example. And it's like the label construct as like this investment arm that like allocates capital to artists, and like the financing deals that are there, and like the equity arrangements, and it's all completely screwed, right? And if you want, let's say, a legacy artist to adopt a very new technology, and then you think you can just cut out all of the crap that's the monster that's next to it, I feel like it's an oversimplification that you can't ignore. Like, there's all of that, like the monstrous beast that's the music industry is there kind of for a reason, and that's because it's really difficult to make money in music, right? And it's really difficult to become famous and to like produce things that people actually want to see. And then the capital concentration is in such a way where there's a few people at the top who kind of make all the decisions, and those decisions get kind of, let's say, encoded in the artists through like their A&Rs, right? Like the representatives from like the label kind of guiding the artists into what themes they want to have in their music, or to what like things they need to include. And then that power structure is there, and it's going to stay there, and that's just there because of the whole fiat money, crap that like,
we'll
it's
see how
really
this
difficult.
Diddy case goes. Maybe it blows maybe it blows it all up.
Yeah, that could be crazy.
We're joking, but like that is part of this power structure that you're describing.
Absolutely. I mean, like, when you have so much already, how else can someone have power over you, right? It's like blackmail material, right? You put yourself in a compromised position, and that compromised position is generally your own fear or desire, right? It's generally fear or desire. Those are the two things that get you caught in these traps. And then once you've been caught, it's like, okay, now the puppet master can do with you as they wish, right? Yeah. And how are you going to onboard someone to like a value for value thing? And also how you're going to onboard the fans, right? Like, music is such a commodity today where, for me, I listen to like YouTube music, and that's really great because I can just, get all the recommendations I have from YouTube and then download them like pretty instantly. And now I have like all this music, like, and I pay YouTube, right? But I don't know where that money goes. It's like a total black hole. And having like a new system where like the network effect isn't there, like you're competing against multiple different like Goliaths that have real weight, right?
Yeah. I mean, I think this gets back to what we started the conversation with is, I think at scale, maybe it's not value for value, but like this ability and mechanism for artists to monetize in a more efficient and favorable way towards the artist is a timing thing. When we're talking about like Bitcoin businesses and timing, like Bitcoin prediction markets, timing makes a lot of sense for me. Again, speculation, killer app for the first 15 years, and prediction markets are just a derivative of speculation, extending it beyond the simple price of Bitcoin or hash rate, difficulty, whatever people speculated on up until this point. But when it comes to that, like, you need the network effect of people actually having Bitcoin and being able to reduce the switching costs to a point where it's like, okay, now I can do this in stream sets as I listen directly to the artist. The network effect simply isn't there yet on the amount of people actually holding Bitcoin and then holding it in wallets and applications that make something like this possible.
There needs to be some level of order of magnitude improvement on the current paradigm for someone to like adopt a new technology, right? Like, inertia is something that's more than just a physical thing. It's a mental thing as well, right? Like, I'm not going to change my behavior unless I'm motivated to do so, right? There's some kind of cause that's making me change my behavior. And, right, like, that's the whole reason why in, let's say, building a business, you want to go for a blue ocean kind of opportunity, not so much something that is already totally occupied with, a bunch of competitors who are, already entrenched in the market. And network effects are something that like basically make it just so much more difficult to compete in like the digital world in, with products and services that already are entrenched in markets, right? And I feel like with speculation, Bitcoin already has product market fit. Like, the first time I ever bought Bitcoin was in 2017, I believe, 2017 or 2018. 2017, I think. And that was because I wanted to play poker on PokerStars, and I was in Korea, so I couldn't actually use PokerStars. So I got a VPN, got Coinbase, bought Bitcoin, then moved Bitcoin to Zelle to some other wallet to like Coinbase, not a wallet to PokerStars, and then I lost all my money playing poker on PokerStars. But like the original reason why I bought Bitcoin was so that I could do something else, right? And Bitcoin like served that value proposition for me because no other currency was unstoppable in that way, right? Bitcoin is unstoppable so long as it doesn't get attacked by these state entities that want to destroy it and censor it. But currently Bitcoin is unstoppable, right? And it looks like it will continue to be unstoppable. And basically now you can do things with like, if we enable speculation directly with Bitcoin, now I don't need to go through that like convoluted, multiple different wallets and fintech services so that I can like deposit my Bitcoin into like PokerStars and lose it. Now it can just be with Bitcoin. And, that's a lot better in my opinion when it comes to like a user experience perspective.
Yeah, completely agree. Timing is very important in this market.
Absolutely.
Yeah. And I mean, you mentioned it too, like the iteration of your business getting to Bitcoin prediction market. Maybe not good timing to make it easy for individuals to run Lightning nodes. Certainly good timing for people to speculate on events using Bitcoin.
Exactly. And I think it's like one of those things where if people really want to speculate on certain events, then they might just do it with their own Lightning node, right? Like if they want to do something with the Bitcoin, then they'll adopt the other technologies that make that happen. And then we could onboard them to like a self-custodial standard, right? Like just get everyone using AlbiHub and then just have like a really simple tutorial on like how to just like get onboarded with that. And then, where to buy Bitcoin, how to like do everything. It's just simple steps at the end of the day. But it's finding that use case that people want to use Bitcoin for, that they'll buy it and then use it actually as this peer-to-peer digital cash rather than just this buy and hodl, like crap. Like that's just, before hodl meant not day trading with Bitcoin and speculating on price. Now it just means never selling.
Yeah.
That's like as good as ossification can get. People just don't even want to use Bitcoin. And that's like, that kind of defeats the purpose of a lot of this freedom tech.
Yeah.
Right?
And if you're listening to this right before you walked into the comments, we actually just published an episode with Parker outside here that dives right into this. Like he wrote his piece on Bitcoin's exchange theory of value. Mm-hmm. And people have somewhat misconstrued like Bitcoin is only a store value asset. I think that's driven by some large holders that are marketing as such, but like value is only realized when it's exchanged. And so like you need this medium of exchange to happen. Actually, it's like Schrodinger's box where you can hodl Bitcoin. It can have a number on a screen, but that value isn't actually realized until you exchange it for something else.
Exactly. Yeah. That's, you need to have this flow of Bitcoin in order for the network to grow, right? Accepting Bitcoin as payment or making Bitcoin payments is a real big challenge, right? Like I know the fellas in Chiang Mai who are like doing a lot of circular economy stuff, and it's really difficult. It's really difficult to change people and move their inertia from the fiat payments that are super easy, simple, and entrenched in society, and now are digital, and you just QR code, contactless, Apple Pay, whatever, like it's super simple. Changing that to a Bitcoin standard and onboarding people to all of this difficult tech to like get them there, like it's a great effort, right? 100%. Like
It's
worthwhile, but it's really difficult. It's really difficult to get people to change. And what I wonder is, okay, maybe there needs to be other use cases that are internet native, that are Bitcoin native, that can incentivize people to adopt and actually spend, right? Because we're not gonna reach terminal velocity just through hodling, right? Just dealing with exchanges, then it's compliance money, right? Because all exchanges are KYC'd.
Yeah. No, and I think, just looking to compare on Polymarket, again, going back to what we said earlier, has product market fit. It's talked about, it's mainstream in that, and bringing that to Bitcoin That's like funny. Like everybody's talking about like, oh, let's bring NFTs and ICOs to Bitcoin via runes, whatever it may be. It's like, no, like, as you mentioned, like stable coins and prediction markets seem to be the killer app over in crypto. And when it comes to porting the killer crypto apps to Bitcoin, I think prediction markets is the right one.
Absolutely, because it's not token based, right? You don't need to have whatever seniorage crap that is in a lot of the crypto protocols and products. You know, it doesn't rely on subverting people's understanding with like a pump and dump NFT kind of scam. It's sure there's this kind of, you know, admittedly degenerate component of like gambling. Yes, that's absolutely there, undeniable. However, it's not there just to be there like all these other products and platforms. There's this kind of transmutation of negative energy that occurs with a prediction market. In aggregating all of these opinions through capital, we can gain an understanding of the future, right? And that's a net benefit to everybody. Even if you're not betting, you're not speculating, you can still peer into the crystal ball of the prediction market and see into the future and see like, okay, this looks like it's probable and it might happen. So let me make a decision that will, in accordance to that, right? And that can be a positive net value to everybody, right? Rather than just speculation for speculation's sake, speculation for the sake of the future.
Yeah.
I feel like that's a lot more compelling.
I like that. I like that pitch. James, we got Cosmic here. I'm very happy. Excited that you're building Bitcoin prediction market and that you're in Bitcoin and that you came on the show. I think this is going to be a fan favorite. We touched on a lot. We got into remote viewing, which I wasn't expecting.
Yeah.
But any parting thoughts, final thoughts, controversial opinions that you have?
Just bet on Bitcoin prediction market. That's it's the future.
Bitcoinprediction.market. Go check it out. Peace and love, freaks. The key.